Hello everyone, this is General Romulus coming to you live from the Forum in ancient Rome. I am so glad to be with you and thank you for joining us once again. I want to remind everybody I'm not a broker, advisor, or any type of leader in your financial world, just a leader on the battlefield of ancient Rome. These videos are for educational and informational, perhaps some educational purposes only. Okay, so we have been taking you along the journey in the ancient Roman General Romulus chariot through these long turning and twisting pathways with all roads leading where? That's right, leading to Rome, some way, some form or another. Well, we drew our yellow lines and boy, have they proven to be quite the battle lines for us, helping tremendously keeping us on the right side of the markets for as far back as these lines go. Okay, after the breakdown from the beginning of the war, there was a nice strong rally that then took the markets above this area right here. It was earlier, I was of an opinion that the markets were probably not going to be able to get up through these lines, all of them being a fair amount of stiff resistance. However, they went ahead and did that, and so we adapt accordingly. Thankfully, we were not of the mass group of exodus selling into these lows over here. We held on to our positions, and now we are poised for another leg higher in this broad U.S. stock market. Okay, so let's take a close look at this, get into some details, and hopefully help us make some Roman denarii. By the way, that's money. Okay, so we have the breakout above the previous resistance area. These are the all-time highs. It enters the trading range after hitting a high at the end of October of last year, punches a little bit higher, then continues to chop around, again, selling off at the start of the announcement when Iran and Israel started attacking Iran. Then there's some overtures of peace. Markets start to go up quite a bit, breaking out above this area right here, taking the market to new all-time highs. Last week, when we saw the retest right here and here, the General Romulus Legion, we upgraded our market status from yellow flag to green on this retest right here. The retest of the previous all-time highs that served as a fair amount of resistance for going back to really the end of October of last year. And now we're benefiting tremendously from that as this market continues to churn higher. Based on all of this, based on what I have seen, based on experience, based on the results that have demonstrated so far, I'm of the analytical opinion, again, the ancient Roman variety, that the S&P 500 has got better than a coin flip chance, probably much better than a coin flip chance, of reaching 8,000. Wow, that's quite a ways, Romulus. 8,000, that's awesome. Let's go. Well, hold on. Hold your chariot racing horses all the way up here. But that's by the election. That's by the first week of November. So you're talking over 6 months from now. And between now and then, we certainly could and probably will see any number of pullbacks and corrections after it makes its little runs like right now onto these new highs. However, 8,000 is a nice distance from even right here. Better from these pullbacks. So my action-oriented steps going forward will be to look more about buying dips and into the corrections and into sell-offs going forward, as opposed to looking to take profits or looking to get heavily short just because the market's at new highs. Remember, an object, we're going to use some physics. Yeah, the Greeks were good at physics. Romans were good at smashing things and building roads, but the Greeks were good at physics. They were better at math than us, I think. We learned a lot from them. One of the things we learned from our Greek buddies that we conquered so efficiently and ruthlessly as we did for hundreds and hundreds of years to all of our friends and neighbors. A body in motion tends to stay in motion, and a trend has a high probability of continuing than it does of reversing. How much higher of a probability? Well, even if it's just 55%, that's still in your favor, right? And it's probably higher. I haven't done the analysis of that. I haven't done rigorous studies on that, but I'll bet if somebody would care to, they'd find that a trend has a higher probability of staying in the trend than it does of reversing. And we have tools, we have abilities, we have experience, we have different data points and sets that we look at that can help us determine if there is a rising probability of a trend about to take a major turn, change in direction. And there's very little evidence right now that this is about to take a major turn. Of course, like I mentioned earlier, small corrections, minor corrections of anywhere from 5 to 8% from recent highs, which certainly could bring the market even below this previous resistance, which could serve as new support going forward areas. However, the evidence tends to lend credence to the idea that we will see higher markets going into the election over the next 6 months. Fantastic. Okay, so what do you want to do with that information? You want to buy relative strength? Well, I mean, the strongest area of the market since the late March, early April lows has been the semiconductor group within the technology sector. And there ain't no way, let me brutalize your English language as I translate from my Latin, there ain't no way that I'm going to be adding fresh money into a situation like this. As overbought as this is, as a matter of fact, our Legion was alerted before the market opened this morning that this was an area to make some money and to bet against. So you can see that that is something that turned out quite well for all of our people. Again, though, this area is extremely overbought and would not look to add fresh money. Pullback, sure, somewhere in this neighborhood, maybe the 50 average, even the 200, but not way up here in the nosebleed levels with all the indicators screaming at historically high overbought levels and conditions that tend to lend themselves to somewhat of a corrective behavior over coming days or weeks. Here's something you probably haven't thought about, however. One of the leading areas of the market going up to the January, February highs, see the S&P 500 prior to the breakout here last week, the all-time high was set on January 28th. One of the leading areas of the market from the tariff tantrum lows of April of 25 up until, again, that January, February topping area was the industrial sector. Something, again, that you probably haven't thought about because everyone's still concentrated on tech, which is understandable, of course, but this is an area that is still underloved, underappreciated, and could demonstrate significantly further upside while taking a lot less risk. So what are we talking about here? A risk-adjusted return and an absolute return. I like that. It's a win-win for everybody. I like everything I'm hearing there. So what you're looking at in front of you is a listing of the year-to-date performance returns of all 11 sectors within the S&P 500. The number one, energy, you probably knew that. You didn't need me to tell you that. Worst performing, healthcare. Yeah, it's interesting because healthcare has been kind of falling down more recently. This is kind of a, you see, and this looks like it wants to go even lower. Not right away, possibly right away, but probably not right away, probably over the next coming weeks or months. This could see somewhat lower prices. And let me go back to the sector. Okay, number one performing sector of the year so far with a 12.5% rate of return. No, I'm sorry, with a 28% rate of return is the energy sector. With the war, with oil prices closing in once again at $100 a barrel, that makes sense. But see, again, here's industrials and materials. Basic materials right here and industrials. They look pretty similar, don't they? And it's interesting that the Dow Jones, which is made up more of industrial basic material stocks than the weighted S&P 500 or the NASDAQ with the tech stocks, you see these charts look a little similar, okay? They don't look like this. They don't look like that. You see the difference? And again, if you look at the sectors, basic materials and industrials, they are second and third on the list. Interestingly, technology, despite its massive upside run since March 30th, is still in fourth place. That's interesting, okay? And again, the worst performing sector for the year, so far at least, is the healthcare sector. So what do we do about that? Well, let's go into industrials, and then we can find the number one performing sector within the industrial sector, which is heavy construction. Then we can look at all the stocks and see what the number one performing stocks are out of the couple of dozen that are in here. Shimmick, I've never heard of that company, but it's up 120% for the year, and Argon and so forth. And you have their symbol lists over here. This idea being that if the XLI sector does break out of this handle right here and not only challenge the highs of late February, early March, but goes on between now and the election to set new all-time highs, which I believe is highly likely, then it is also highly likely that the top 5 or 6 stocks on this list right here will go up even more, will do even better than the XLI. because strength begets strength, okay? The portfolio managers, the big money, they're going to want to chase in here, and they're going to want to get involved in the stocks that are doing really, really well. Okay, so let's take a look at some of these companies over here. We've got Shimmick, never heard of it, doesn't matter. You see, buying it here would have been better. I didn't buy it then, but that would have been better. Or a breakout here. See the volume jump as well. This is a small, low traded stock. Average volume every day, 141,000. That's a little bit low for me and my kind. Plus, it's only a $6 stock. So I'm going to cross that off the list. That's not going to be for me, okay? But AGX, now we've got a $650 stock. Again, buying it from after one of these consolidated periods. A little one right here that it seems to be going into might be a better idea. So that's one stock. Another one, CDNL. Don't know about this one either. Cardinal Infrastructure Group. This one looks interesting. Brand new, okay? IPO'd here or spun out somehow about 4 or 5 months ago. And it looks like we have a decent volume. I like to see 500,000 shares or more. You see the average daily volume. The blue line is 419,000, which isn't too bad. It's kind of close enough. And this stock, my opinion is that between now and the election is going to be at least 20% higher, possibly even more so. MTZ is another one. Let's take a look at this one. All right, I'm not a chaser on this one. Mastech, this is a big company. On a pullback to the 50-day average or something like that would make perfect sense. Ooh, that's a good entry. Somewhere between, let's say, 320 and 340. Somewhere in there, that looks like a great entry. And this could happen. I mean, the stock goes up a lot. We are coming into a period of time when you start to hear sell in May and go away, although I think that could have a little bit of a temporary dislocation to the upward trend of the market. I don't think it's going to have any serious damage. And again, by that, I mean a market that pulls back 10% or more from recent highs. So if we do get some kind of a temporary dislocation, a minor correction, I think that MTZ would be a good company to look at. Let's see, Sterling Infrastructure. Oh, this one would have been great right through here. I missed that as well. And, I apologize for missing this stuff, but we brought you so many different ideas, so many great profitable ideas, so many ways that we have helped you sidestep the markets, corrective periods and choppy areas, and then be involved in the upward moving spots, sectors, and groups that you just can't hit everything all the time when you're doing a few videos a week. However, this brings up a great point. You can always become a centurion in the Romulus Legion. All you must do is email me directly, romulusteaches@yahoo.com. Again, romulusteaches@yahoo.com. I guarantee that you will be incredibly impressed with everything you learn going on inside of the Romulus Legion. So Sterling Infrastructure also looks good on a little bit of a pullback. This one right here, Everest Construction. Now, this looks good right now. It looks like we have earnings in a couple of days, so there's that earnings risk. But I might buy some of this one going into the earnings, and I would add to it on a pullback if there is a temporary disappointment in the earnings release. And last one, MYRG. We have a stock that is also up and away, and I wouldn't be doing anything with that. So you can do the same thing. You don't have to sit there and wait for me. Stockcharts.com. Just go into the sector groups and rank them by year to date. Go into basic materials, which is performing a little better on a year-to-date basis than the industrial sector. And you go to aluminum. However, aluminum, I'd be careful with that one because that's a straight Hormuz kind of thing. Commodity chemicals, steel. Steel would be a good one. And then you just look at the top 5 or 10 stocks and get an idea about maybe you want to buy one or two of them on a pullback. Maybe there's a couple of them that could be breaking out soon or right about now. So you can do this at home for yourself, and you don't even have to worry about getting hurt. I mean, you might hurt yourself financially, but not physically. You sit down in the chair, you should be okay. Okay, well, talk about relative strength. There's a gladiator match tonight. That's right. And old General Romulus is being afforded the incredible privilege and honor of sitting with the top senators of ancient Rome. And looking forward to all of that. And we will find out who the strongest is. And this will not be on a relative basis. This will be on an absolute basis because somebody absolutely dies at the end of these matches. But that's what we do in ancient Rome. Okay, remember, the General Romulus Legion is always looking for consistent returns regardless of market direction. Doesn't matter to us. The S&P is tanking like it did a couple of weeks ago or flying up. We're getting these consistent returns regardless of market direction. And we would love to have you join us. romulusteaches@yahoo.com. Okay, on my way to the Gladiator Games. That's all for now. I will see you soon.